Hello and welcome to this week's Ferrari Financial US Market News Summary. Well, the uptrend continued this week. We hit a new high on Friday with the rather good jobs report and the revised upwards figures for August as well, giving the market at least a feeling that the economic slowdown may not be so severe as first thought. But of course, the real reason for the continued uptrend has to be the surprise announcement by the Federal Reserve a couple of weeks ago that it was cutting half a point off both the Fed funds rate and another half a point off the discount rate. It was that second part of the announcement that really lifted the markets, far more than they really expected. But we think it was a little bit too much too soon from the Federal Reserve and may well come back to haunt them. So let's take a look at our Nasdaq chart. 12-month chart now for the Nasdaq Composite Index, because I really want to show you the movement over this last 12 months with regard to the long-term average line here. As you can see, back in July we had what we thought may have been the top of the market for the time being, formed here with the big drop away on the concerns for the credit markets. And in fact we did have a panic day back in August when we in fact touched under the 2,400 level at 2,380 approximately, with a quick rebound. What is significant though is the volume action around this period. Excuse me. We have really two things to look at. The typical build-up that you would expect at a sell-off point here. More importantly, when there was a short recovery in the early part of August, that's when the volume reached its peak. Not so much at the buying point, but at the first opportunity to sell at a reasonable price off the top. Now that's significant to us, particularly when it's reinforced by the fact that when the rebound did come on the news that the Federal Reserve was going to most probably cut rates and support the market to some degree, we did get the inevitable increase in volume on that day and the day after, but it was very short-lived. And notice how the volume has dropped away dramatically at this point here. These 2 points are significant, and even though the rebound has been really more than we expected and has in fact gone on to create a new high, it's done it on relatively low volume. The volume is starting to build again near this new possible top. We're well extended now off of the long-term average line, which is again a point to note. And all in all, we feel that this may again be another top forming and not just a continual trend further upwards. If I draw the long-term trend line, which really came from this point here we go, drawing it through there and not at the base of the panic action, but really at the base of the action over that 2 or 3 days, which is really that point. You'll see that the trend line now is showing that the new high formed on Friday with the rather good jobs report and the readjusted August figures has really reached a point well above the long-term trend line and ripe for profit taking and at least a short-term reversal at this point. Of course, the action by the Federal Reserve has also weakened the dollar dramatically in the last couple of weeks, another point that will not help the Federal Reserve's decisions going forward. We do feel that although we have to change and modify to some degree our chart scenarios going forward, our basic position has not really altered. We do feel that the market will experience a downturn towards the end of the year. Let's just discuss 2 scenarios that we think are now more appropriate. One is the channel line that we drew a couple of weeks ago between the low in mid-August that was reached at 2,380 and really the high of a few weeks ago, which has now been just exceeded. The only difference really with that channel line now is that instead of it being roughly a parallel channel line, it should be drawn with a slight upward slope. But we do still feel a sell-off is going to occur now back into the main part of the channel area. Depending on factors such as volume, etc., we would then look at as the new sell-off point and reopen really the discussion of a head and shoulders top, and whether in fact we've just moved on a frame and now the new peak of last Friday in fact, may be the new top to the head and shoulders pattern and not as we originally thought about a month ago. So we'll keep a very close eye on the situation, and until next week, it's goodbye from London.